What I was going to say is that I modeled taking Hex and swapping for ICOSA and going all the way back to Hex. So going through HSI, tokenize, sell, and found that maybe with a small amount of Hex, maybe 150,000, you could do it 6 or 7 times, definitely lose some value in gas, right? And lock up 1 million Hex, Quattro Cinco. So if somebody was benevolent and wanted to spend maybe $250, at that level, they could lock up 1 million Hex by doing that process and feed the entire system. It was kind of an interesting game theory concept. And now it depends, of course, on ICOSA LP holding up, right? So you probably could quickly drain LP that way.
Yeah, unless you are able to do it periodically and then be able to gain one particular asset over that period of time and then push it all to another liquidity pool and then extract it through the bigger liquidity pool when you want to do it. It might be like a different tactic. It might take a little longer, but while it's so early and people don't have the opportunity to have the liquidity, it might be a tactic that you have to figure out how to play.
Yeah. Well, I wasn't looking at it. I was looking at it just from the game dynamics, not from a make money perspective.
Oh yeah, those game dynamics are facilitated by the make money people.
Yep.
For sure. And I'm not even one to usually go through that type of trouble. But it is fun to know how to take advantage of those things and go on to testnet and really get a bunch of free tokens, which is fun to do.
Also, what fascinates me about it is, so if you're leaning towards being a Hex maxi and you believe that locking up more Hex Quattro Cinco is good, it's kind of interesting that you could facilitate that, right, and just keep doing it. Yeah, for sure. Absolutely. Until the share rate moves to so far ahead that it kind of, you lose that incentive because your borrowable amount is going to be harder to get per T share too. Yep. You could even maybe do it in slow motion, because I have found, I'm not doing this, by the way. I just was like trying to figure out how it might work. I might test it and see. I mean, I've tested doing HSIs to sell back and gone through the whole process. But yeah, the idea that you can lock it up bodes pretty well. And then my experiment with taking liquid. Because I didn't, this will sound funny, right? You'd think I could get my head around all this stuff, right? But it is a complex system, for sure. And going through the process at first, I think a lot of people do this. They look at that. Well, if I swap liquid in, and I immediately go to ICOSA, I don't get much benefit, right? I mean, it's pretty close to a net sum, net zero gain or loss. I mean, so, you can definitely lose a little bit for sure. But if you go to HSI earlier, what I'm finding is that my HSIs are maintaining a little bit of a premium over what the current ceiling price is, or what what the current ICOSA price is, which I found interesting. So let me translate that to better English. I took liquid hex, made it in HSI, and by my calculation, I'm up 7% over what I would get if I had just left it liquid. If that makes sense.
Is that because the amount of capital needed back then, when you made that HSI, had a lower share rate, meaning that you were able to get a higher T-share rate, which means more of a borrowable amount on that HSI at that time?
Yes, 100%.
Yeah, that's
and you would think since I work with the T-share freaking number every day that I would know that, right? But it's not obvious.
Right.
Maybe it's obvious that we're saying it now, but it wasn't obvious to me. So,
right.
So don't listen to anything I say.
Well, when people were asking if I have days that I've completed on my stake, am I credited through the buyback to get ICOSA? And I was like, no, you're not. However, and then pretty much explain that same thing to them. And I was like, because the only way really that you gain an advantage by making the hex stake or the HSI earlier was that the share rate was lower and it required less hex, which was less capital at that time. The price really hasn't moved a whole lot at that time, which actually price I think was higher than when it launched in the first place. In February. Jeez, it's been a while.
Yeah.
And it's almost been a year. Wow. Crazy.
Yeah, I can't wait. We need to get some more days under our belt.
Yes.
Because then you can start looking at more of a higher level of moving averages and whatnot. I use the 350-day moving average for a lot of things, so I need 350 days.
What are you doing it on now? A 50-day?
I just let it run. I'm looking at the 111, but yeah. And yeah, Hedron's doing pretty good. I mean, this is the first time we've dipped below the 111 in a very long time, and it held up as support, sort of. I mean, we're just below it right now, but it bounced right back up to that level.
Yeah, that picture of where the liquidity is at that I posted next to where the price is at shows where the bottom of the support is for the price right now anyway. So pretty much right on the money. Yeah. Where the support was at before, the liquidity is still sitting in the same position. So it and I'm talking for hex, right? And since everything else is attached to that, what happened was with hex, this recent thing, it was a shark of hex that dumped the hex, so everything attached to it was correlated to it, went with it. And then the rest of the markets just dumped recently too with Bitcoin and Ethereum, so it kind of hit us again. So that's why you got to see two very clear wicks to that same price point, was because that's exactly where liquidity ended at that price, and it still sits that way. If somebody sells again, they're going to find out that wick gets put right back at that same spot. So be careful. We're at the bottom side of volatility. I should be a TA guy. Just shock the fuck out of people. It would have to be a daily analysis, though, of liquidity.
It's a lot of work.
Yep. But I could just do hex, right? And know that through that daily analysis of where the liquidity is, since it's the majority of liquidity across all of the ecosystem's pairs, then I'd be pretty good at being able to do the TA for the rest of them. Like shockingly, incredibly, phenomenally, very well be able like, just don't tell people where liquidity is at, like I have been, like in this chat, and just call the TA like where the liquidity is, and everyone will be shocked that that's exactly where the price goes. Like I can actually have a crystal ball. It'd be kind of neat. But then again, it'd be destructive. Too many of you guys would get wrecked doing silly shit, I'm sure.
Yeah, I use I'm pretty crappy at TA, but I can follow trends and momentum, okay, and I certainly can look backwards and see data, right? So it's easy to be brilliant when you're looking at what already has happened. But I use those numbers, the moving averages, to kind of get an idea of what's going on with the market, and it is they're pretty strong predictors of tops and bottoms. Tops, well, at least cycle tops, is close to within a few days. That you can really see that the top is in. But bottoms, cycle bottoms, it takes maybe a month or 2 months to confirm. It just takes that long to get out. To have enough time behind us to be able to say, yep, we confirmed, but by then it's already 2 months, 2 or 3 months that you're already going sideways and up. Very, very interesting. That's why with Hedron, I'd like to see us get to the 350, because I only have, on the day charts, I only have 111 so far, and it's all based on Fibonacci stuff, right? So, yeah, golden ratio stuff.
Well, I mean, it makes a lot of sense to me to be able to have at least like a Fibonacci thing for support, right? On understanding where like significant support levels are. Through the availability of curving that chart, right, across that type of scale, is pretty kind of neat, because how liquidity providers consolidate at certain ranges and support price at certain ranges causes for not necessarily the market makers per se to consolidate and garner more assets, but it's where the community gets the opportunity to be able to do that at certain points in time, and consolidate and purchase for a longer period of time that price, and because of that, more of them get emotionally connected to that entry point or exit period at that price. So like right now where prices are cheap, it's probably easier to be able to get more people connected while it's going sideways, like the 3-cent hex forever, like used to that and connected to that. So the next time if the price does go up, and everyone that bought at 3 cents or Hedron where it's currently at and it goes up, then they're going to be connected to maybe even defending that 3-cent price because they bought there before. And if because price went up, they were like, I'm losing my DCA power in this. So they psychologically might be tripping themselves out a little bit. So they're like, well, if it just goes back down to 3 cents, then I can buy again. And it looks like a definitive point where psychologically the community at least is defending their own entry position, right? So that Fibonacci thing can really kind of point out how the community responds to certain price points based off of where the liquidity providers are actually garnering the allowance of price to derive at that location for that period of time. Does that make sense?
Yep. There's some stickiness. The longer we're hanging around a price, the more stickiness there is to that price.
Yep.
That's when you look at the the Hedron price now, and 3 is definitely now. You're also saying that that's around where the liquidity places it as well, but 3 is definitely a point, that range, a little bit below 3, 5 zeros into 3. We've got plenty of history, at that level. Doesn't mean you can't go below it. It just means that it's likely to be support, or we break below it. Resistance.
If we break below it right now, from what I see, it's highly volatile where there are no market makers supporting that price. So any amount of buys is just going to push us right back up to the current price that we're at. If it does get pushed lower, until market makers start moving their assets down to support the price, then volatility will slow down from that point on Hex and in Hedron.
Yep.
But it'll allow them to go down if they do move it down, and volatility will slow down in those areas. But if they don't move, then we're just going to have this choppy spot until some event happens that starts pushing all the pairs up again. It could be liquidation stuff. It could be all sorts of reasons why the market makers are like, we're not selling cheap Hedron right now. I don't fucking think so. There's so many reasons why, as a market maker, you could be like, well, soon, depending on their availability to be able to get more assets to sell after they've had their first selling spree, the market makers themselves, right, to set assets at a certain risk range to allow for thickness to be at certain areas. Using V3 is technical and difficult to do and manage, but can be done. One individual can have multiple ranges is kind of what I'm saying. So if you got multiple market makers all doing the same thing, and that's why they use V3, then they are trying to manage their risk. But the one thing that they're not going to do is, during, especially an asset like Hedron right now, have an assessment of value lower than what they currently are right now, where the support, like you said, through the history of the support at this particular level right here, would mean that there's enough people that have a relationship with this particular price where they're going to defend it at all costs. And the market makers happen to probably be the majority of those people. They probably bought at some of those lower prices and would absolutely prefer for Hedron to not have the availability for people to buy at those prices again, so they won't garner that lower price anyway. It's kind of a little bit more technical. I guess I would have to think of it like a little bit more technical, the thought process of how long-term market makers would think, I guess, because they were never really speculating. They were over that, right? The reason why they started at the very beginning was because they were like, if the asset goes to nowhere, then no big fucking deal. And if it goes to somewhere, at least I've got the best position to not worry about risk and just let it fly. Like, I'm never looking back at this liquidity position for like the next 5 years anyway. And if it is to do anything, it's to probably consolidate or take your fees and dump it back in, manage it maybe in a certain respect other than just leave it, come back in 5 years, because that may not be technically possible. But yeah, I know that those types of market makers exist, though. They're like, I know V3 exists, but I'm going to be here for a long time, not a good time. And they do V2 and they just let that roll. And then they go do different V3 positions and have little riskier plays on other movements and availability to support the price, but they want it to be thicker. So it's kind of funny that you can kind of thicken the whole pool by having V2 liquidity there, which really kind of thickens up the availability for price to go in all ranges of price, even zero. But V3 really kind of defines the sharpness of the availability of being able to drive price, in my opinion. And sentiment does matter. And like having an asset that does actually create a community of people, like does create value. It derives value as well. It's got to incentivize everybody. Everybody's got to win, right? The market makers, the investors, the traders, the founders, the holders, you know, everybody's got to win, right? And so it's tough. It's tough to do that. And usually for lots of people to win, somebody has to lose. But if you have a benevolent type of behavior from a different source that's not normal, then it kind of turns a lot of that understanding on its head, like what you can do with that type of capability to be like the benefactor of your community, to be able to provide like these assurances without expectations, just based off of actions. And it's just kind of like, wow. When you really wrap your head around that, it's a lot of the worry about speculative bullshit and the reasons why some of us just laugh at the FUD because we're like, not again. Like, really? Like, people are falling for this shit again. It's, it just kind of goes away, right? And like I said, it's the reason why we're laughing, right? You don't need to know whether some of the stuff that's said is bullshit. You just are waiting for someone to come out with a smoking gun as the reason why it's bullshit because you didn't even consider it. You already knew it was bullshit.